Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be having a very interesting session, and there's a lot more going in the markets, especially in the bull market. If you haven't experienced it yet, then you should most probably look at your charts. A lot of good things happening in gold, silver, SP500, Dow Jones, and the Nasdaq. And this comes after last night, US President Donald Trump signed a bill that is set to reopen the US government after we've had the longest US government shutdown lasting about 45 days. So as usual, this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So kindly give me a sec. Can see already Kerim Shoki is already in the house. Good morning. I am Kay. Good morning. Thank you guys for joining. Let's get things started. All right, let's proceed. So there's quite a number of things happening in the markets as of this morning, and we'll be going through item by item. And once we cover this, we look at what to expect for the rest of the week. Then after that, we will do some technical analysis, try to understand what's happening. Then once we do this, hopefully everyone will trade from an informed perspective. And see Simon Gitonga in the house, Manu, Odiwa, thank you guys for joining. So let's focus on the economic calendar. So this morning we had news coming in from Australia, where there was a big surprise uptick in the job market, where the number of jobs created in the prior month was 42.2 thousand jobs. This was more than double the expectation of 20k jobs, and of course higher than the previous 12.8k jobs. So as a result of this increase in the number of jobs created in the Australian economy, the unemployment rate reduced drastically from 4.5% to 4.3%, beating expectations of 4.4%. So as a result, there was increased confidence in the Australian dollar, and we've seen the Australian dollar become stronger compared to the dollar as well as other currencies. Then fast forward to 10 a.m., we had economic growth data coming in from the UK, where GDP month over month contracted by 0.1%. This was a drop compared to the prior change, which was 0.0%. We didn't expect much, but we had a slight drop. Then preliminary GDP quarter over quarter also disappointed, coming in at 0.1%. Missing expectations of 0.2% and of course lower than the 0.3% reported in the prior quarter. So clearly here we are looking at a weakening UK economy. So construction output was up 0.2%, big improvement from the prior negative 0.5%. Goods trade balance slightly improved to negative 18.9 billion compared to the prior reading of negative 19.5 billion. Index of services was up 0.2%, missing 0.3% expectations. But then industrial production is where everything is at. So industrial production month over month went down 2% in the UK in the prior month. And this was a big drop compared to the 0.3% 0.3% reported in the month before. So manufacturing production was also down 1.7%. which was lower than the prior reading of 0.6% increase. So preliminary business investment was also down 0.3% quarter over quarter, a slight improvement from the prior reading of negative 1.1%. So clearly, the economy of the UK is going through a lot of problems, and this is ahead of the budget that is coming later this month. So as we move on for the rest of the day, we'll be having quite a number of things. One, there will be FOMC members speaking, that is Fed members. One will be Dali at 4 p.m., Kashkari will be speaking at 6:30, Musalem at 8:15 p.m., and Hamak at 8:20 p.m. So these speeches will be mainly focused on US monetary policy. It's good to follow them to know the position of the members, owing to the fact that past the prior Fed meeting, the probabilities of a Fed rate cut on December 10 were 90%, and now they have reduced all the way down to 53.9%, indicating that the market has less confidence that the Fed will be going for a rate cut on the next meeting. So that has been quite a challenge in the market. So listening to Fed members, you can tell the most likely direction they are going to vote on the next Fed meeting. So we'll also be looking at the crude oil inventories. We know that WTI or US oil has currently dropped to $58 per barrel, whereas the UK oil is also down, currently around $62 per barrel. So there has been quite a strong bearish momentum. So we'll be looking at US inventories to see if they increase or drop. So a drop in inventories shows scarcity, and in that case, price tends to go up. And an increase in inventories shows that there is plenty or excess, and then this leads to much lower prices. So we'll be focusing on that at 8 p.m. ahead of the federal budget balance, which will be announced later tonight. So fast forward for the rest of the week on Friday, we will not be having any major news. So as we speak right now, the main news currently influencing the market is basically the reopening of the US government. So the shutdown was quite a headache for a lot of markets. We saw a lot of markets diving down, including gold, silver, US equity indices, even European equities. But then now we are looking at the government reopening from today. So clearly quite quite a strong rebound from prior lows. So on the other hand, we were expecting US CPI data today, but then you can see from the calendar it's no longer there because the BLS members have not come back to work. And for those who are new, BLS is the Bureau for Labor Statistics. So they basically compute US economic data, which the Fed uses to make decisions. And since they have been home due to the shutdown, then they haven't even reported back to work, which means that we will not have that data. So most likely we'll be getting that data from next week. Of course, we'll be expecting out of volatility from that data and other reports. So that being said, we move on to the next big news in the markets. This is the main driver of the markets today. Government shutdown latest, the longest stoppage in US history is now over. So a deal to end government shutdown is now law after it was passed by the House of Representatives and then quickly signed into law by President Trump to end the 43-day stoppage that is now the longest in US history by over a week. The vote passed by a tally of 222 versus 209 will be opening up our country very quickly, Trump promised earlier in the week as the deal came together. The bill will give federal workers back pay and keep the government open until January 30. To also fund certain federal programs such as the Agriculture and Veterans Affairs departments for the entire fiscal year and impose limits on Trump's ability to fire federal workers, among other provisions. The Senate struck the deal over the weekend and approved it on Monday evening with a 60-40 vote. The focus will now turn to the economic effects, with the tally likely to go on for weeks. An October analysis from Congressional Budget Office estimated that a 6-week shutdown almost the exact length of this stoppage, would cut in would cut in Q4 GDP growth by 1.5 percentage points before the economic quickly rebounds by early next year. By the end of 2026, the shutdown is expected to result in the US economy being permanently smaller by approximately $11 billion than it would have been otherwise. The effect on economic data delays is also likely to linger, with the White House saying Wednesday that both the consumer price index and jobs report for October are likely to never be tabulated and that economic data will be permanently impaired. Headaches at the airport, which saw thousands of flight cancellations each day during the final week of the shutdown, are also likely to take time to return to normal. So yes, the markets are very optimistic about the reopening, and we'll be looking at that later in the technical analysis part. So yen sinks to record low versus euro as Japan PM touts slow rate hikes. So the yen dipped to a record low versus the euro and wallowed near a 9-month trough against the dollar as on Thursday after Japan's new prime minister said she wanted the central bank to go slow on interest rate hikes. The Australian dollar climbed to a 2-week high, buoyed by official data showing a steeper drop in the unemployment rate from a recent 4-year high than economists had forecast, reducing the possibility of further rate cuts. So currency markets could face volatility over coming days with the release of a backlog of economic data after the prolonged US government shutdown ended late on Wednesday. However, the White House said that jobs and consumer price index figures for October may never be released. Then slipped to an unprecedented 179.5 per euro early on Thursday before bouncing back to trade at 179.43. The Japanese currency slipped as low as 155.02 per dollar, putting it just a whisker away from Wednesday's trough of 155.05, a level not seen since early February, towards changing hands at 154.91 in the Asian afternoon. So clearly, we should be expecting to see more volatility in the yen pairs. And of course, if you look at the performance since the market opened, you'd notice that the weakest currency has been the US dollar, closely followed by the Japanese yen. So on the strength side, after a very strong jobs report, we have the Australian dollar as the strongest currency for the day, up 0.58% against the USD. So the currency of the year, which has been the Swiss franc, up 0.27% against the USD, euro up 0.21% against the USD, and as always, sometimes we check the year-to-date performance, and the currency of the year is still the Swiss franc, up 14.09% against the USD. The euro is also closely to the currency of the year, up 12.19% against the USD. Australian dollar overtook the GBP. Now it's up 6.28% against the USD, and GBP is up 5.06 against the USD. So none of the major currencies have performed worse than the dollar. So the dollar has been the weakest currency since the year started. So a deep dive into the Australia's labor report. So Australia's seasonally adjusted employment rate declined 4.3% in October 2025 from September's near 4-year high of 4.5%, compared with market expectations of 4.4%. The number of employed people fell by 17K to 665.4K in October, down from 682.4K in September, which was the highest level since October 2021. Among them, the number of people seeking part-time jobs fell by 4,600 to 223.8K, while those looking for full-time jobs declined by 12.2K to 441.6K. Meanwhile, employment increased by 42,200 to a record high of 14.68 million, surpassing forecasts for a 20,000 rise following an upwardly revised gain of 12,700 in September. Full-time employment increased by 55,300 people to 10.14 million, while part-time employment dropped by 13,100 to 4.54 million. The labor participation rate was unchanged at 67.0%. The underemployment rate fell to 5.7% from 5.9% in September. Additionally, total monthly hours worked across all jobs climbed 11 million to 1.999 million. So clearly, all these data points indicate an improvement in the Australia's labor market. And as we all know, major central banks have two mandates. One is to maintain stable prices, the other one is to maintain full employment. So if the labor market is doing well and inflation is not a threat anymore, then it is absolutely not necessary to be going for rate cuts. It's absolutely necessary to go for rate cuts. A worsening job situation will necessitate rates to be cut, but then an improving one, rates will remain high. But then on the other side of inflation, which has not been a big problem for Australia, inflation has remained within predictions. So we have two contracting mandates. So the job market says keep rates high. The inflation reports say keep cutting rates. So investors are enjoying these, especially currency traders, since the full-on impact is a strengthening of the Australian dollar. So other than that, I'm trying to see if there's anything else I may have missed. No, I think we have pretty much covered what we need for the day. And now we can jump straight into some technical analysis, try to understand where the markets might be headed next. So for those who are new, this is called the MetaTrader 5 trading application. It's the app that we use for trading. Just a sec. So if you prefer using a smartphone, you can download the Equity Trader by FXPesa. That will help you trade from any smartphone. The app is available on App Store as well as Google Play Store. So from what we are looking at here, this is a chart we have been following for quite some time now. It's a chart of silver. Remember when we discussed the potential of the formation of an inverted head and shoulder here? So when we were discussing it, the price was just here. Then earlier this week, we discussed the completion of the pattern. And now we are looking at a breakout and a continuation. So the breakout happened to be straightforward and a continuation. So after the Trump's scare of the US government shutdown that lasted around 4 weeks, we had this reaction of the market dropping, but now silver has recovered almost 100% of the sell-off and it's about to go into a new high. So the high that we're expecting silver to breach is at a level of $54.463 per ounce of silver. So that's not very far off from the current price, but it's also a major resistance level for silver. So if we happen to see a break, we could be seeing a push towards $56 per ounce of silver. There will be no candlesticks on the left unless you want to look back all the way back into the 1970s. So clearly, there is still more room for upside for silver, especially once we complete this 100% pullback. So we have seen this before, and this was yesterday on the Dow Jones. So the Dow Jones did kind of a similar thing. This was the all-time high. The Dow Jones fell for about 3 weeks and then made a recovery this week, eventually hitting the prior high. So once we go to the prior high, there was some form of consolidation. You go to the 15 minutes chart, you'll be able to see the consolidation here. But then eventually in the New York session yesterday, we had a break that pushed the Dow Jones higher. So for those who are waiting for the eventual break, it happened and rallied all the way up, and now we have a new high. So today we could be seeing the Dow pushing for yet another high. Notice how we had a big momentum shift, and then since that 1 hour, all we have been seeing is some form of sideways momentum. So we should wait and see if there's another break and then continue trading in that direction, knowing very well that the Dow Jones has been pretty strong and is on a very strong bullish momentum. So this could be extended later today and perhaps even tomorrow. So as for gold, it's a similar thing, but it's a bit slow. Gold is yet to reclaim the prior high. So the prior high in gold is somewhere around $4,382 per ounce of gold. And now you can see that we had, I would say, an 8-day consolidation that eventually had a breakout. I believe this was Monday, Tuesday, Wednesday. Yes, this was the breakout on Monday. Tuesday traded sideways, and then yesterday we had a breakout, and today we are seeing a continuation. So a very strong bullish momentum that is likely to extend all the way back. Since the shutdown is over, there is no more scare to short gold. So good chance that we see this momentum extending to 43.82. So we are at 42.37, so we are potentially looking at $150. So normally we have been seeing $70, $80 moves per day from gold. So perhaps this will extend into tomorrow. But for today, it seems like a very strong bullish momentum. So if we had to go for a chart of the day, most likely that would be gold, which is having a very strong momentum. So you go to a smaller time frame, you'll notice that since midnight, nothing was happening. Everything is happening right now during the opening of the London session. So we have covered gold, silver, and now we have to check on oil. So I remember when we analyzed this was on Tuesday. Then we saw that this could potentially get a breakout. The breakout happened here, and the market went higher. Then we saw the market drop yesterday, and now we are testing a very major trend line on the lower side. So I'll be removing this. This is past information now. This, and this can be adjusted all the way up here to match the new high. So now we are looking at a market that has been finding support along this trend line, and it's attempting to find some support along the same trend line again. So the idea is to go for a buy trade once you see evidence of buyers coming in. And if you don't see the market bouncing from here and there's a breach lower, then you go for a short trade. So the idea is to track the price action as is around this area here and see what will be happening. So on the currency side, we have mentioned the AUD-USD pair. So I remember on Tuesday, we mentioned there was a sideways momentum, which also extended on Wednesday. You'd notice how this extended. But then we had this breach here, 2 green candlesticks, and then back. So this was indicative of a breakout to the upper side, a pullback. But then today, after the news, we are seeing a very strong momentum. And the last time we saw this was about 2 weeks ago. So of course, I expect the Australian dollar to continue pushing higher. So good chance that we see this momentum extending even higher, and targets could be around the prior high, somewhere around 0.66121. We have pound USD, which we had analyzed on Tuesday, that it would go all the way down. Unfortunately, it went back. But then the following day on Wednesday, eventually got to our target. So the idea was if it gets to this area, you observe and see if there's a break or continuation or revert back up. So after we got to this support yesterday, the market bounced. And today, in the last 1 hour candlestick, you can see what was happening here. Market attempting to go down, failed and closed higher, indicating some form of bullish momentum. So the buyers now changes from that. So now we reinforce the support from this level and this level. And after the market did this, then the likelihood is that the market now goes back up. So the idea is now to target the opposite direction with a very strong pound taking on the USD, good chance we see a retest of that area. So for Euro USD, we've had some form of volatility where it's not easy to identify some of these consolidations, like what was happening here. That was on Tuesday through to Wednesday. It wasn't easy to identify these. But then past midnight, you'll notice that this one was easy to track. I would say this, but you can already see that there was an even higher low here. So after this consolidation, we have seen a very big pump in Euro USD. That's on the 15 minutes chart. And the real question is, are we going to see a full reversal? Well, that is not very certain because of what we are seeing here. So yes, there has been a very strong bearish trend connecting the highs on Euro USD weekly. So now you've had a breakout towards the upper side. So usually for Euro USD, which is a slow pair, you'll get a breakout retest continuation. So it's not completely out of the line if this happens. And then the market goes back before continuing in that direction. So this is a book pattern, and it's very common on Euro USD. So we might see it happening today. So looking at the dollar Swiss franc, the currency of the year continues to bully the dollar. So from the 1 hour time frame, this is pretty clean. I remember we discussed something along these lines here on Tuesday, that if the market was to breach this area here, then you go for a short trade. This played out well on Tuesday, on Wednesday, and now on Thursday we are pushing even lower. And now that we are here, the idea is that this bearish momentum could extend all the way to 0.79281. So good chance that we see an extension of that bearish momentum. You can see how strong the bears are currently right now. So for USD JPY, we saw a breakout out of this sideways consolidation. But then after the breakout, nothing much has been happening. It's more like the market broke out of a range and created just another range. So it's more of sideways momentum here, slow grind. But of course, we are out of the prior consolidation. So the idea is that the yen is weak, and once the dollar strengthens again, we could be seeing another push towards the upside. So Nikkei 225 index, clearly in some form of consolidation. Nothing much is happening here compared to the prior volatility that we have been seeing in the markets. So from here, you can see that we have a common line of support and also a common line of resistance. So the market is trading between those two lines. And if you go to a smaller time frame, this is the 30 minutes chart. We can see that the average direction of this market is this way, with the potential of a breakout perhaps happening here, sending us for short positions. And a potential break to the upside will most likely trigger buy trades. So on the other hand, we have the UK 100 index still cruising through a new all-time high. So on a smaller time frame, you can see that this momentum is coming to an end. There has been some signs of consolidation. So if you observe these two levels, then you can see for almost 2 consecutive days, this market has been on sideways momentum. So this is what we are seeing on the UK 100. So potentially we could be seeing some form of reversal, especially with the oncoming budget. So good chance that we see a break here. But if we don't do see a break, there's also the patience of waiting for a break in the opposite direction. So it's not the best thing to trade within a range when the price is moving mostly sideways. It's better to trade trending markets. So BTC is really struggling, but also still finding very good support around the, I would call it the 100K section or price level. So if you look at the sequence of prior lows, and then you try to connect them, that is yesterday and today, then this is what you would get. So it seems like gold is finding some support around there, and that's good. Sorry, not gold, but Bitcoin. So good chance that we see Bitcoin pushing from here now and pushing even higher. So the dollar index is dumping right now. Of course, we have seen what Euro USD is doing, a very strong rally. So New Zealand USD has completed the inverted head and shoulder pattern and now is making a run for it. So this is one of my favorite patterns to trade. It's a very easy way of identifying trade opportunities. So on the short run, the idea is to target the size of the shoulder. So the size of the shoulder is here. So we just drag this arrow here, and we have our target here, 0.57093. So I expect this market to now push for 0.57093. So good chance that we extend this momentum that way. And if you go to a smaller time frame, you'll notice that this price action level was some prior support around this area here. And if you really zoom out, you'll notice it has been quite a significant price action area. So good chance that we see the market going for that. So what we got right on Tuesday was European equities with the German 40 breakout retest continuation, playing out perfectly, going for our target, and then extending the following day. So now we are seeing some form of pullback, which is very much welcome. But the idea is to trade the reversal as the market heads towards the prior trend, which was a bullish momentum. So for the DE30, DE40 of the German DAX, we still expect the market to maintain the momentum and get towards the target, but we are not yet there. So the pullback is welcome, but the idea is to continue trading upwards. So for the EU50, we also got this right. We were looking for a buy here, targeting this area. The market has extended the rally. So now we are seeing a full-blown bullish momentum into a new all-time high. So good chance that we see a continuation of the same. For the French stock market, we expected a rally to this area here, which was extended the following day. And now we broke above this resistance and we are moving higher. So we go to the 4-hour and daily time frames. You notice that we just breached into a new all-time high on the France 40. So good chance that we see a continuation of this momentum higher. So for the Swiss 20, we expected a bullish momentum here to this area. We got it right, and the market has extended that bullish momentum today. So good chance that we see yet another push, both in the London and New York session. Norway stock market index, this one we didn't get correctly. We're expecting a break and a rally to this area here. But then what we saw yesterday was the breakout retest continuation kind of system, where the market makes a breakout, goes back to the breakout level, and then now executes the original idea of trading in the direction of the break. So that is it for the Norway stock market index. For the Netherlands stock market index, here what we have is a market that just broke a major trend line. You can all see the major trend line here. So try and zoom out so it's easier and clearer for you guys to see. So the trend line is a line of best fit. It's not mathematical. You're trying to connect the highs and see the average trend here. And what we got from this is a book pattern where there's a breakout, a retest, and a continuation. A retest is right here, and our continuation stems from this point. And of course, we expect the price to be moving higher. So good chance that we see the market going for these levels, and that's around 982.46 euros per share. So pretty interesting ideas here. US oil, as I mentioned, hit $58 per barrel. Of course, there's more room for downside. Of course, should be expecting an extension of that bearish momentum. to perhaps around $57.376 per barrel. The Hang Seng 50 is also making a run for it, looking to achieve a prior high of around 27,384, and now we are testing the current level, seeing if we could breach and get to the previous high. So as for the USD card, the dollar is really losing to the Canadian dollar. So we've had this channel that almost looks like sideways momentum. This has been acting as the resistance, and of course, if you look at the support area, I would say the support has been following this path here. So with this kind of pattern, we expect the market to either break or bounce, with more likelihood of a bounce, the dollar bouncing back against the Canadian dollar, but also the potential for an eventual breach from these levels could also be playing out. So that is it. That's the technical analysis for the day. Hope you learned something. Hope you identified an opportunity for yourself. Remember, tomorrow is the 14th of November. This is when we have an event at iHit Kenya Kileleshwa. So if you already sign up, make sure to plan accordingly. We will be starting exactly at 1 p.m. and that's the Bullish Banter Traders Roundtable event. Make sure to turn up. Let's have a discussion tomorrow. So checking on the comment section to see if there's any questions. You can see one comment here. So somewhere that the Fed officials are divided among themselves. So in the event, they remain 50-50 on a cut or hold. Will it affect 2026 decisions? So we rarely get 50-50 on a cut or hold. Usually, the Fed members will meet one day before announcing, and then they will deliberate and they will try to turn one member if in case there is a draw. So eventually, there will always be a majority in the Fed. So they are divided. The Fed members are divided because some of them are going for rate cuts aggressively, as per the Trump side, and the other side is deciding to hold interest rates steady. So don't bank on 50-50 kind of dead rock. That will not be happening. Hi Maureen, thank you for joining. Say hi to the traders in Mombasa. Tell them they are welcome in Nairobi. Susan Kirote, thank you for joining. When the demand falls, do you buy or sell? When demand falls, you don't buy, banana. When demand falls, you don't buy. If the demand of a stock is down, that means price is also down. So in that case, unless you are a long-term investor, for us, we follow the liquidity. And if liquidity is showing that they are not interested in an asset, then we are not interested. So for instance, when demand was falling for US equities a couple of weeks ago when they implemented a shutdown, we went for short selling trade. Now the demand is back because the US government is open. We are going for buy trades. Hi Dominic, thank you for joining. You're most welcome. Tomorrow's event will be recorded. No, it's how do I describe it? You have to be there to see it. You have to be there to experience it. So make sure you turn up. There will be a big debate on guys from the side of crypto, guys from indices, guys from forex, guys from commodities such as gold and oil. So expect some good fireworks on the debate. We'll be having a live podcast recording, and of course a panel discussion on the state of the industry, regulations, and everything about trading. So that is it. That is all for today. Thank you very much, everyone. Thank you for liking and subscribing to the channel. Also, if you're watching this on X, like, share, a comment will go a long way. So that is it. Go out there and make pips out of these markets. Thank you.